Nilesh bhai, 1 minute. Yeah. Good afternoon, everyone. Uh, I welcome you all to this continuous knowledge sharing webinar of the Rera Practitioner Welfare Association. Just some brief about the association. Our association was started in August 2021, and since then, we have been continuously doing the knowledge series on webinar, and now we will be doing physical seminar also in the month of June. uh, so I request each and every participant to spread the news about the activities of the association amongst various states, zone or region. We need to expand the activities of the association to the central level so that we can represent before the Central Advisory Council as well as central government and various RERA authority. Because as a association, we can certainly uh, keep some good impression over the RERA authority or the various authority wherever we need to make the representation. Now today the topic is very hot, that is IBC versus Rera. Now we have been seeing many judicial pronouncement in this respect. Wherever a corporate is dragged into IBC and the real estate projects are involved in that corporate, then what will happen to the allottee? There has been lot of development, and today we have a very good speaker, Advocate Nipun Singhvi, on the subject. He has delivered many lectures. Now I'll request our secretary, Advocate Nilesh Gala, to introduce today's speaker.
Good afternoon, friends. I welcome you all on a Saturday noon to join this webinar. We have a very eminent speaker who is going to speak on a very hot topic as on today, where the developers are being going insolvent and how to bail out a project from a CIRP. And that process has been a cumbersome. And Mr. Singhvi, who is today's speaker, has personally appeared in various such matters and has strategized to bail out such projects. And he will be sharing his experience, not only theoretical but also practical. And I'm sure that this webinar will be very interesting and all the participants will gain out of it and take a lot of knowledge out of it. I now introduce Mr. Nipun Singhvi, who's a practicing advocate and who's today our eminent speaker. He is a qualified FCA, CS, LLB, LLM. He has completed his master's in law from corporate law, certified forensic bank auditor, qualified independent director, has been executive program on mergers and acquisition, qualified insolvency examination, have been member of the World Bank Insolvency Group. Uh, the qualifications runs in pages now. So he has, I would say, Pandora's box of knowledge, experience, and qualification. He has been awarded by Divya Bhaskar Dainik Bhaskar Group an excellent contribution in real estate. He has delivered more than 1,500 lectures. Itself is a goal and achievement for him. On various laws across India, now has been a regular faculty at ICAI, ICSI, National Bank, CAG, Trade Association, has written journals, books on various topics, has published books in Taxman, Corporate Professionals Today, has his articles have come across Economic Times, Dainik Bhaskar, has been advising and handled more than 600 plus insolvency cases, has more than 1 lakh crores important cases which include his clientele for JP Infra, Lanco, SR, Ambuja Cement, Syntex, ABG Shipyard, and goes on. The list goes on. Has been a social activist, an RTI activist, and a practicing advocate. I hereby welcome Mr. Nipun Singhvi to share his knowledge with all the participants today. And I'm sure we all will take a lot from today's webinar. Thank you.
Yeah, thank you, Nilesh Bhai, for kind introduction. Nipun Bhai, now everybody is eager to hear you. The battlefield is yours.
Thank you, Ashwin Bhai. Thank you, Nilesh Bhai. Thank you for wonderful introduction. Thank you, Ashwin Bhai, for calling me here. And I must tell everybody that though Ashwin Bhai has called me, but now he is also an insolvency professional. So I think he will be always ready to help you out in insolvency related cases. And good to see you, Dilip Bhai. And I think Ramesh Prabhu sir is also here. Nice to have all of you. In fact, today's topic is very much near to my heart, though I have been working in both the laws, IBC and Rera. But I must tell you that in case of IBC, I was involved in assisting the parliamentary committee when this law was in fact not even a law on the law book. It was only in draft stage.
Yes, you have to take it up.
In fact, in 2015.
Nipun, by just 1 minute.
Yes,
May I request all the participants to switch off their mic? It's creating a little disturbance to the speaker. May I request all the participants, Janish, Veera, thank you. Thank you. Sir, please continue.
So this law, I would say that in 2015, we never thought that it would come so fast. And in fact, it was referred to Parliamentary Committee for deliberations. But this law kicked in 2016. And all of a sudden, in fact, before 2016, whenever we used to say that a company is not able to pay its debt, we used to go for declaring the company as sick company. We all used to rush to BIFER to declare a company as sick. I still remember those cases when we used to go to BIFER in Delhi to file a company's case, declaring it as sick. And I remember Mr. Bachchan's case, where its company was not accepted as a sick company because the Cinematographic Act was not permitted to take the company into sick company. BIFER only allowed manufacturing company. So same was the issue with regard to the sick companies when all India you had only one forum. But insolvency law has opened many gates, helped revive many companies. In fact, the real estate company, which has led to many amendments in the IBC, right from the day one, the case, the JP case, which we will discuss today, 3 times amendment in the act has been done because of JP case alone. So that is the impact of the real estate industry on IBC law. And though RERA and IBC both came almost back to back, but because of the overriding nature of the IBC and recently held by Supreme Court in Pioneer Urban also, that IBC would override RERA law. So though RERA laws has provided many of the, I would say, loopholes which were otherwise exploited by the maybe the developer side or the builder side, they have been capped the loop. But in IBC, many of the projects which otherwise were not viable, they have also been tried to, judiciary has also tried to evolve them as viable real estate projects. So I'm just sharing my presentation. What I will do today is, as Ashwin Bhai has suggested, that first I will try to touch upon some of the basic parts of how IBC works, and then I would try to connect those particular aspects with real estate. So how did the IBC come into force? Where do we stand if we are an allottee in a project, or if we are a builder, or we are a developer, or maybe the landowner? So all those aspects we would be covering in the IBC background. How the process runs, how a claim can be filed, what would be the rate of interest, how would be the claim accepted, whether resolution can be done by bringing a plan in the company, or maybe a project is being carved out from the complete company, and if nothing goes well, how the company would go under liquidation. So broadly speaking, these would be the agenda for the day. And yes, JP case I would be referring in and out, because that is the only landmark judgment of real estate which has gone back and forth to Supreme Court almost 3 times now. So these are the statistics, though they are old statistics. I don't have the March 21 exact data because that has not been released by IBBI. But this is the broadly statistics with regard to construction and real estate industry, that around 183 cases were admitted. 22, I would say, either settled or there was a stay by the appellate forum. 11 withdrawn. That means the matter was settled between the parties and the insolvency did not go further. Resolution plan was accepted in 6 cases, and in liquidation, the cases were around 17. So broadly speaking, these are the statistics last given by Insolvency Bankruptcy Board of India, that how the real estate industry has been playing around with IBC. Now, before we talk about the interplay between both the laws, I would like to explain some of the important basic concepts of IBC. And I would start by saying that since we all are aware, Rera and IBC all came together, or I would say back to back, hardly a 6 months gap or a 5 months gap. IBC being a code has been held by Supreme Court that it has an overriding effect with all other laws, and therefore it is called a code and not an act. So therefore it overrides other acts also. Somebody is speaking.
40+ GST. ક્યારે આવશે? સોમવાર આવશે ને? એટલે હું વાત કરી લઈશ જોડે.
Nilesh bhai, somebody is speaking. Can you just mute him? Okay. So I would just like to tell what our IBC code is. Our IBC code in India has taken inspiration from United States law, which popularly is called as Chapter 11 bankruptcy. Now in India, we refer to it as insolvency and bankruptcy code, but in US, the terminology used is of bankruptcy. Like Mr. Trump, he has been bankrupt for 6 times. That's what the campaign during the election was against Trump, that he has been a bankrupt person. Can he become a president? So answer in Indian context is, in India, we understand that if somebody has been bankrupt, there is something wrong. He must have siphoned off money, diverted his funds, and therefore his company has become bankrupt. But it is not so case in the US. And in US, they have a clear-cut demarcation between an entrepreneur and an entity. In India also, if you look in the books, there could be promoters who are very genuine businessmen, but because of XYZ reasons which are not in their control, the company might go under insolvency, or company might ultimately become insolvent not to pay off its debts. So in Indian context, for companies, we call it insolvency and followed by liquidation. For individuals in India, we call it insolvency followed by bankruptcy. Whereas in US, the bankruptcy word is used for corporates also. So just to give you a background, when you are comparing something in India with something outside India, like in US, then there is a difference in terminology also. So a Mr. Trump was never bankrupt, but his entities which were not able to pay were bankrupt. So there is a difference between both of them. So in India, when we are talking about corporates, I am referring to company and LLP. So most of the queries which come to me are whether my entity is covered under insolvency. So you have to check. Partnership firm, no, it is not covered under insolvency. As of now, insolvency code is not applicable to partnership firm. It is not applicable to proprietorship firms. It is not applicable to simpliciter individuals. But it is applicable to those individuals who have given guarantee for a loan taken by corporate. So when I am talking about corporate, it means a company incorporated under Companies Act. It could be listed company, it could be unlisted company, it could be a company limited by shares, company limited by guarantee. It could be an LLP also. So LLP provisions are also notified. Like, for example, Reliance Communication is under insolvency. Anil Ambani, who is a promoter of Reliance Communication, his insolvency also can happen, is happening, in fact, because the individual who has given guarantee for a corporate loan, he is covered under IBC as of now. But let's say I have a proprietorship firm. I am today not covered under insolvency code. So this is the first requirement. If we want to take somebody under insolvency, to declare that particular person as an insolvent, this is the basic minimum eligibility in India as on date. Is there any query with regard to this? You can ask me, because this is very important. When we are talking, we should talk in the same language, corporates, non-corporates. So today we are only talking about corporate insolvency. Okay, so I suppose no queries till now. So this is how the process begins. So insolvency basically is a process. It is a process which is running into around 270 days, and then extension and exclusion and everything included 330 days. So in this process, basically, a publication is made that you file your claim. After getting all the claim, a publication is made that yes, now somebody can come and bid for the company. I think Mr. Parag, your mic is open. Please mute your mic. If the insolvency process fails, nobody comes and take over the company during the insolvency process. What will happen is the company will have to eventually go under liquidation. Now under liquidation, the assets would be sold, and obviously the valuation of the assets would be less in the liquidation than under insolvency process. So in liquidation, it is only selling of assets, nothing beyond selling of assets. In insolvency process, there are various benefits, because the person who is going to buy, he will get number of benefits. So those benefits I am going to discuss today in our presentation also. And after liquidation, when the assets are sold, liability is never zeroed, because assets are less, liability is more. Therefore, the company is under insolvency. So after selling of assets, when the assets is zero, the company goes under dissolution. So insolvency, liquidation, and dissolution, these are the basic three steps which we are going to discuss today. Now, some of the terminology again, because sometimes people confuse these terminology. So I'm going to just clarify what are these terminology. I've clarified insolvency, liquidation, and dissolution. Now, some people refer to companies as winding up. Now, under Companies Act 1956, there was a concept of winding up. When a company was not able to make the payment, the High Court used to declare the company as gone under liquidation. They would declare the company to be wound up, and therefore the winding up process was initiated by the High Court under Companies Act 1956. Now, when I am talking about insolvency law, there is no concept of winding up under Insolvency and Bankruptcy Code. So your question would be, sir, can today be the company be under winding up? Answer is yes, it can be under Companies Act 2013. There are some provisions for winding up, but I would tell you practically they are not useful. Why so? Let's say a company is found to be doing some anti-national activity, maybe doing some terrorist activity, maybe doing some activity which is subsequently declared illegal by the court of law. In that case, company will have to be compulsory wound up under section 271, 272 of the Companies Act 2013. So today winding up is of no use for us. We can practically take it. Today, the preferred mode of closing down the company would be going through insolvency. If the company fails, it would be liquidated and ultimately dissolved. When we are talking about the terminology of bankruptcy in India, company is never bankrupt. It is the individual who becomes bankrupt after he fails to repay his creditors. So again, terminologies which we are going to use today would be insolvency and liquidation, because we are going to talk about corporate insolvency. I think somebody's voice is coming again. Okay, so now let us take a quick example when a company can be said to be insolvent and how we can actually find out that a company is insolvent. So this balance sheet says that there is a good amount of land, there is a building also, there is a bit of cash also, and company has taken loan which is much less than the value of land. So let us take example of this, assuming this is a resort. Let's say there is a land on which the resort is built. So building value is less, land value is more, and let's say the building is under construction. Let's say it is a resort, or let's say it's a real estate project where the chunk of land is valued too much in comparison to loan, but the cash flow is less. Let's say due to some activity, the cash is not coming. Assuming, let's say there is a COVID. So there is no generation of cash on a day-to-day basis. We cannot make the payment of the loan. So can I say that company is insolvent because I am not able to pay the loan? No doubt, I have good amount of assets. My land bank is good. I have a building also. There is a valuation which is coming off my asset, but I am not able to make the payment due to less cash flow. So yes, participants, now I would request you to give some answers. Can we say that this company is insolvent? Yes, you can write in the chat box also, or you can unmute yourself also.
Unless it is unable to pay the debt.
Okay, so basically I am not able to pay the bank loan, EMI of the bank loan. So can we say that this company is insolvent? The balance sheet of the company displayed on the screen.
No, it is, unless and until NCLT, admit the case, we can't say it is, insolvent. From the act perspective, NCLT approve the case, that becomes the trigger point.
NCLT will adjudicate on what? I am asking, what is the parameter of
The account becomes the NPA, and then,
This information is not reflecting the default, because default is very important for admission of the case.
Okay, so basically, if suppose my loan is of 75, assuming it is 75 crores, and the EMI is, let's say, 10 crores. So I am not able to pay the 10 crore EMI. So let's say I am not paying the EMI and there is a default. As per IBC law, there has to be a debt, there has to be a default, and then there is an insolvency. So even if I am not able to pay one EMI, I become a defaulter under IBC. There is no requirement of being NPA. Under IBC, there is no requirement of becoming NPA. IBC has only two parameters. There should be a debt and there should be a default. Default amount should be more than 1 crore. That is the basic limit. But if there is a default, yes, this company is insolvent. So now what I am trying to tell you all is that the concept of balance sheet test is gone away. You need not see कि मेरे पास assets कितनी है. I need not see कि मेरे पास land कितनी है, मेरे पास building कितनी है. What I have to see only is whether I am able to pay the debt obligation or not. If any one point of time I am a defaulter, I am insolvent in terms of IBC law. So this is very important, that even on one default, I can say that my company or my entity is insolvent. Now let us take another example. You forget the last line of the balance sheet. Just see above, there is a good amount of land, building, cash. There is also reserve and surplus, and I have taken a loan also. Now here I am not defaulting in loan. My land is sufficient, my bank balance is sufficient, and I am able to pay the loan also. But what happens, there was some case pending against me in High Court or Supreme Court or Income Tax Tribunal or GST Tribunal, some court. Now that liability of that pending case comes against me, comes against the entity. Will the entity be able to pay 500 crores? The balance sheet strength is hardly 200 crores. This litigation penalty which is coming, I will not be able to pay. Correct? So this crystallized liability, I am not able to pay. Now, can I say that I am insolvent? Yes, answers please.
Unless there is a claim and default.
So there is a litigation wherein court has held against me. So let's say High Court has held against me. So I have two options. Either I will file appeal in Supreme Court or I will accept the case and will have to pay the amount. Correct?
Correct.
Anybody else would like to try?
Litigation is pending with Supreme Court. We have to wait for Supreme Court judgment. Liability.
Lalitji, I am saying that let's say I have fought in High Court and I have failed. I have two options. Either I can go to Supreme Court to fight the case, or I can accept the High Court verdict and I have to pay. Assuming that I accept the verdict of High Court, I don't have money to go to Supreme Court. Whether I am insolvent?
See, government, the cell tax department, any department of the government,
Any department.
they can, file for insolvency as a, OC, they will be an operational creditor at the end of the day.
Correct. So anybody who is a winner in any court case, it could be High Court, Supreme Court, Tribunal, and that claim is against the company, and the company is not able to make the payment of that claim, the company becomes insolvent with respect to that claim. Now, this is a live example which I have taken. You must all have heard about telecom companies. Why did Vodafone and Idea merge? What was the reason? I think one slide is missing. Vodafone and Idea merged. Aircel went under insolvency suo motu. We all know Reliance Communication is under insolvency. What is the reason? Because Supreme Court gave a verdict where 41,000 crore become payable by the companies. They were not able to pay. Otherwise, their companies were stable. They were having money to pay. But because they were making a litigation in the court, which ultimately they did not win, and therefore the company turned into insolvency. So what I'm trying to say is there could be some litigation against a company which ultimately company does not want to pursue, or where in the opinion of the company, now there cannot be a further challenge and therefore they have to accept the challenge. So in such a case, the company is again insolvent. So what I am trying to tell you all here is that by seeing the balance sheet of the company, sometimes the prima facie view may be that the company is having good assets, company is having good value, company is a solvent company. But ultimately, because of some litigation, which is off balance sheet item, I suppose all the members who are chartered accountant must understand what is off balance sheet item. For those who are not chartered accountants, off balance sheet item is some contingent liability which the company has not acknowledged as debt in the books of accounts. So if there is a litigation which can come against the company or which has come against the company and company does not want to pursue it further, then it is a better to take the company into insolvency. As Lalitji said, if the litigation is pertaining to sales tax, income tax, something like this, government dues come at the last way in the pedestal. I will discuss the waterfall pedestal, where if it is at the last, they will get nothing. And therefore, it is better to declare the company as insolvent and get a revival done rather than to fight with the department and ultimately fail. So these are two key takeaways which I wanted to discuss with you. When a company can be solvent, when a company can be insolvent, and what would be the better proposition to tell to our client to declare your company as an insolvent or not. Now, some of the laws, though these are only prescriptive in nature, all these laws, whether is excise, custom, income tax, recovery of debt due to banks, SARFAESI, all these laws get overridden by IBC. Why so? Because of this, because of Amitabh Bachchan. This is only for the purpose of making you understand that section 238 of IBC code says that this law will override all other laws. So it overrides other laws means, so if there is a conflict between income tax law and IBC, IBC will override. If there is a conflict between IBC and GST, IBC will override. If there is a conflict between IBC and Rera, IBC will override. So section 238 is very clear. this law will override all other laws which are in the force at that point of time. Now, this is waterfall which I was trying to explain. What is this waterfall? So this is the one slide which gives you the complete understanding what happens in insolvency code. Insolvency code has given priority to some of the claimant. So what happens in insolvency? Let's say the total amount of liabilities against the company is 1000 rupees and the value of assets of the company is 600 rupees.
Sorry,
So,
Nipun bhai. Sorry, Nipun
yes,
bhai.
sir.
Only one query
Yes, sir, please.
on this overriding effect. Now, Rera, Section 89 says that the provision of this act shall have effect notwithstanding anything contained therein in any other law for the time being in force. Now, both this law came in 2016. I think Rera came first, IBC came later.
Correct.
It was notified in November, December. Rera was notified in May. Now, this kind of provision in various statute. Now, how one you can interpret like which overrides what?
So, sir, your question has been answered by Supreme Court in Pioneer Urban Judgment, Pioneer Urban PUCL judgment, which we normally call, wherein the question came before court was, since both the laws have come back to back, they both are in 2016, which should override? And in fact, a plea was raised by the home buyer side that RERA should override. Supreme Court has in very great detail explained why IBC would override, but just to sum up, first of all, IBC is in later point of time and a special law which is made for the revival of the corporate debtor. So that is the logic why they are giving preference to IBC for overriding all other acts. Secondly, I explained in the beginning also that IBC is a code and others are only acts. So code is always codification of other acts, and therefore code will always override any act. And that has been the history of code over 100 years. Almost after 100 years, a code comes. So whenever there is a conflict between code and an act, code always overrides. Why this is so? That I will explain by way of this slide only. That suppose in my example, 1000 was the claim and 600 rupees is the asset. Nobody is going to get 400 rupees, that is for sure. So that is 400 is a haircut, confirm, nobody can get 400 rupees. Now 600 rupees, how this 600 rupees will be distributed was a matter of conflict. If assuming we take into consideration every law, sales tax law will say that the arrears of land revenue will have to be paid in priority. Income tax law will say it has to be paid in priority. So what was happening whenever a bank was not able to recover the money from the borrower, the first thing bank used to do was go and take the possession of the plant and machinery or maybe the factory premises of the defaulting company. So they will go and take the possession. Then income tax will come and say, my tax is not paid, therefore I will attach the bank account. Then sales tax department will come and say, now I will come and attach the bank account because my payment has to be paid over other dues. So income tax, sales tax and bank all used to fight together because every law used to say that this has an overriding effect. If you read Sarfazi law, that says it has an overriding effect. If you read income tax law, they say it has to be recovered as an arrears of land revenue. So to put all these things into rest, they made this IBC and said that all the claimants will stand in a particular queue. What is the queue? The queue is on your screen. Queue means that the person who have to take amount, that is 1000 rupees, they will stand in priority as per this queue. So they are going to ultimately get 600 rupees because 400 is gone. Now, how this 600 will be distributed? The first money will come onto the first level. Let's say in the first level, the claimants are of 100 rupees. So out of 600, 100 is gone. We are left with 500. Let's say at the second level, 200 rupees is gone. We are left with 300. So on and so forth. So probably after fourth level or maybe after third level, I am left with nothing. So the person standing in the queue below will get nothing. Why this particular priority sequence was changed? Because In Companies Act 56, you see government dues were in top priority. Second level is the government dues. Now this government dues in this particular IBC has gone to sixth level. I have written the word crown debts. Crown debts means any debt due to central government, state government, or local authority. So first time in the history, government has accepted that we are going to sacrifice the money. That is the basic concept, that if the company is not able to revive, then Rera cannot come into picture and say, no, you pay the home buyers interest, you pay the home buyers compensation. See, money is not there in the company. So the logic of sacrificing or logic of this waterfall is that the persons who have invested higher stake should be at higher pedestal. The persons who have not invested that higher stake should come below the rank. Now, obviously, there will be criticism of both the sides, that government has allowed them to work, so they should come above. Somebody might say that operational creditors have given goods or services, they should come at the top priority. But these all things have been put to rest by Supreme Court and upheld the waterfall mechanism, wherein the priority is now fixed. What is the priority? Insolvency process cost. So the insolvency professional fee. So Ashwin bhai, when you are going to be the insolvency professional of a real estate company which is insolvent, your fee is going to be the top priority. So that is for sure. Secondly, if the process is entailing some cost, during the process we have to run the company. Let's say in SR Steel, insolvency process was running. When the process was running, the steel plant was not closed. It was producing steel. The raw material was going and the production of the final finished steel was coming out. Now in that process, labor, that process, electricity, water, all these have to be paid in priority, because the process cost is considered to be the top most cost to keep the company as a going concern. So law says if you want to run the company, want to sell the company, you have to keep it alive. So making the company alive, insolvency process cost has to be paid in priority. Second priority comes to the liquidation cost if it is going to be an estimated cost. So if the company is viable, liquidation cost will not come. If the company is not viable, liquidation cost will come. So I will explain you in both the phases how it will come. But for the timing, forget liquidation cost. The second priority is given to the workers. So who are laborers, who have a livelihood right, they are given the priority, just like we have a priority for workers in all the laws. Whenever you take any law where winding up is there or closed entities, distribution of assets is there, workmen are protected, because we in our constitution have given specific rights to the workers. So here they say for last 24 months, the labor who is not paid will be paid. So worker of 24 months, workmen dues are paid, or I would say the laborers are paid, wages are paid. And then qua them, in addition to the workers being paid, secured creditors are paid. So who are secured creditors? In 99% cases, these secured creditors are those creditors who have some security. So they have given loan and taken some security. So for example, bank. What will bank do? Bank will mortgage the land and then give you the loan. So bank is nothing but a financial creditor who is a secured financial creditor, given finance and taken some security. After this third level, fourth level will come of those employees whose dues are of last 12 months. So just like workers, employees are also protected, but employees are coming after the secured creditors. So that is very important. Secured creditors debt stand in second priority. I think some disturbance is coming. Okay. Thereafter, unsecured financial creditor. Now, who are those unsecured financial creditor? Some of the NBFCs who have given finance but not taken any security. Home buyers who have given money to the entity but they do not have any security. So here it is very important from the point of view of real estate, whether a person who has given money as a customer to the company will be coming in the second level of secured financial creditor, or he will be coming in this fourth level of unsecured financial creditor. So I will explain you in detail, but just for the sake of broader understanding, if money is paid, you are an allottee, you are a financial creditor, that is for sure. Whether you are secured or unsecured, we will come to know in the further slide. So just hold on to this question. When we move ahead, it will be clear. After that, government dues come. Now, what are these government dues? Government dues are income tax, sales tax, maybe municipal tax, maybe some water tax. All these taxes, levies by central, state government or local authority will come in the crown debts. Together with the crown debts, who are in the priority? The secured creditors. Some disturbance is coming. Mr. Rajan, please mute your mic. Then secured creditors who have security, but that security is insufficient. So suppose State Bank of India had given a loan of 100 rupees and now security is only of 80 rupees. So for that balance 20 rupees, they will not come in the priority as we have understood above. They will not come with the worker. Their 20 rupees will come here with the crown debts. And after all these are exhausted, other creditors comes. Who are other creditors? Like somebody who has supplied raw material. So somebody who has supplied, let's say, the cement to the company, they will come here. So those creditors who are supplying raw material, who are supplying goods, or some professional who has supplied services, they will all come in this priority at the last level. I don't know, again, some noise is coming. Thereafter, shareholders will get money. Practically speaking, in my all the cases where I have handled the insolvency process, no shareholder is getting any money because the money is not even able to sufficiently pay the government dues also. So there come no chance of shareholders. But theoretically speaking, if there is any money in this process, it will go to the shareholders, preference shareholders and equity shareholders. So till this point, is there any doubt? Then I can take the doubts. Otherwise, I will move on to who can initiate insolvency. Okay. So we'll deal with the questions at last. Okay. So there are three types of persons who can initiate insolvency. So creditors could be operational creditor or financial creditor. So operational creditors, I think I have already explained. Somebody who has supplied goods to the company, somebody who has supplied services to the company, they are all called operational creditors. So let's say, for example, employees are operational creditors. Trade creditors like vendors, they are operational creditors. Labor is an operational creditor. Employee is also an operational creditor. If the company is not paying rent, landlord will become an operational creditor. So all these are operational creditors. Now, definition of operational creditor is goods or services or taxes. So as I think Lalit Bhai already told, that tax department will also be an operational creditor. In fact, in Gujarat and Maharashtra, I have seen GST department now filing insolvency cases against the company because they are not paying the taxes. So they are filing in the capacity of operational creditors. Now, the other class of creditors who can file insolvency is financial creditors. Now, who are financial creditors? Who have given finance to the company. So banks, NBFCs, or any person who has given intercorporate deposit to the company, they all are financial creditors. Now we are aware the limit for financial creditors is 1 crore. So that is for sure. But for home buyers, though I will come in the later part of the slide, it is 10%. So that is something where they have increased the threshold for financial creditors. So first of all, if I am an allottee, I am financial creditor. And for filing an application, it has to be 10% of the total allottee. So that I will come on to after we read the definition. But for the understanding, the application can be filed by operational creditors, financial creditors, and the company itself. So a company can also decide that I want to go for insolvency. How the company will decide? They will first call a board meeting, then they will call a shareholders meeting, and in the shareholders meeting they will make a resolution by special uh, shareholding, that is 75 special resolution in the shareholders meeting, that yes, we want to declare our company as insolvent. Without calling shareholders meeting, now the companies are debarred from filing insolvency. Before the amendment, what they were doing is board of directors were calling a meeting and filing for insolvency. Only board of director approval was required. Now the law has been amended and they say that shareholders special resolution has to be passed. Without special resolution, you cannot go for insolvency. Special majority, you are aware, 75% they have to get consent in the shareholders meeting. So there could be only 3 categories where insolvency can be triggered. So this is section 7, financial creditors, section 9, operational creditors, and company itself, section 10. So all these 3 types of section 7, 9, and 10 insolvency can be triggered. If you have any doubt in section 7, 9, or 10, then I will take section 7, 9, or 10, or as I proceed, I will clarify the doubt. I will take Ashwin bhai, I will take the bailout of the project, because first I am trying to tell who all can trigger it.
Yes, Nipun. And request to participants, please keep on mute, and we will have question answer session at the end. So let speaker complete his deliberation. Okay. Yeah, Nipun bhai, continue.
So this is the definition of financial debt. So I have just tried to put it before amendment and after amendment so that it will clarify. Financial debt in general terms, somebody who has given finance to the company. So finance could be by interest, without interest also. It could be by way of letter of credit, bank guarantee, debentures are there. There could be then loan given on stock. Any type of financial lease is also a financial debt. So all these are financial debt. But the most interesting part for today's discussion is clause number F. The clause number F is, normally we know, residual clause. If something is not covered in A to E, it should be classified in F. That is how the language is worded. Language says that any amount raised under any transaction which is not covered above, any other means not covered above, forget about forward purchase or sale, having the commercial effect of borrowing. Now, having the commercial effect of borrowing is a very important terminology. What do we mean by commercial effect of borrowing? Commercial effect of borrowing means that some money which has been borrowed by the company, but it is having the effect of borrowing. So let's say I have bought a flat at 10th floor, and the company, the builder company is making the floors and it has only reached 2nd floor. So my money, which is though taken for the 10th floor, that is being utilized by the real estate project company to build till 10th floor. So in a way, what I have done is I have given money to the company, which is ultimately can be considered as a borrowing for the company. So this is the logic by which clause F has been interpreted by the courts to clarify that the money even given by the customer is also a creditor, because ultimately those goods or services has to be given to the customer. So what has been done, I just take you to the background. Previously this clarification was not there, so therefore judgments were home buyers not to be treated as financial creditors or operational creditors, and some judgments were that they were treated as financial creditors. So I'm not going into each and every judgment how they were treated, but in short, because of this ambiguity, it was not clear whether the person who has given money to the company is a financial creditor or an operational creditor in the capacity of an LOT. Thereafter, it was clarified that financial creditor includes the LOT, and this clause F was interpreted by Supreme Court that yes, this is a LOT is a financial creditor. Now your question would be, if I am an LOT can I be a secured financial creditor or unsecured financial creditor? So I will come on to it. Till now, I am only saying you are a financial creditor if you are an allotee as per Rera. You are an allotee and that is a project registered as a real estate project, then you are a financial creditor. If there is any doubt in the definition, then I can clarify here or we can move forward. Okay. So now, can I file an insolvency petition? Yes, as a financial creditor, I can file the insolvency petition. My petition has to be accepted or rejected by the NCLT. After admission, I will file for the claims, ask for the claims. So this is, let's say, the JP Infra case, the biggest real estate matter till today, which has reached Supreme Court. So this was how the public announcement was made. Claims were called for. You can see when this was first time done, this was, I think, the first few cases of real estate in 2017 when the law had come. Here, the claim form was not mentioned. You can see form B, C, D only. So thereafter, now we have form F also. So I just want to tell you that home buyer's case was not clarified in the JP Infra matter also. Only after this matter went to Supreme Court, claim forms were collated for home buyers specifically, and they had come out with the clarification also that yes, home buyer are financial creditor. And till the Supreme Court ruled out of it, there were various different judicial decisions saying that they are operational creditor, they are financial creditor, and one judgment was they are neither operational nor financial. So such type of differing views are there. But now the law is very clarified. If you are an allotee, you are a financial creditor. So the claim were collated, and now what the law says is that the board of director of the company gets suspended. So once the insolvency gets triggered, the board of director gets suspended, the powers of the board of director are suspended, and it is replaced by committee of creditors. Now, who are committee of creditors? Those persons who are financial creditors, but who are not related to the corporate debtor. So suppose I am the relative of board of directors and I have given loan, I will not be called for COC meeting. We are an allotee. Whether we will be called for the meeting of COC? Yes. But suppose there are 5,000 allottees, there are 2,000 allottees, whether all of them will be called in the meeting of COC? To resolve this question, the Insolvency Board of India came out with regulations of representative in COC. So if there is a class of creditors or financial creditors, they will be represented by an insolvency professional. So that is very important. Again, this was first time proposed in one of my matters in 2017. It was a chit fund company case, and ultimately IBBI accepted it in home buyers case also, and regulation came wherein it said that insolvency process has to be run by financial creditors, and all the home buyers, or I would say all the allottees, are financial creditors and have to be represented through insolvency professional. So suppose Ashwin Bhai is the insolvency professional of JP Infra Limited, but he cannot become insolvency professional for home buyers. For home buyers, we have to propose another insolvency professional who would represent the home buyers. Now, suppose there could be more than one class of financial creditors. I think somebody is again, I think somebody will have to mute the mic. Okay. So the financial creditors class will have to be
Nipun bhai, 1 minute.
Professional.
Nipun
Yes,
bhai,
Ashwin bhai.
I will unmute all and then I will give the permission to you to unmute. I will first mute all.
Okay.
Yeah, now can you unmute yourself?
Yes, sir. I have done unmute.
Yes.
So this is the amendment which I wanted to explain, to show you the explanation that allotee is now included in financial creditor definition. Now, 2-3 queries which generally come to me in this part of explanation. Sir, if I am in Kolkata and there is no Rera law here as it was, now Supreme Court has held that West Bengal HERA is not applicable and Rera will have to be enforced. Now today also, when Rera is not applicable, whether a person who is an home buyer in West Bengal, whether he would be a financial creditor? Answer is yes. Then in that particular case, NCLT will have to adjudicate and say, yes, he's an allottee and he's a financial creditor. But in other states where Rera is applicable and you are an allottee, then you are a financial creditor. By no stretch of imagination, anybody can deny that you are not a financial creditor. So that is how the financial creditor is being interpreted. Any person who is an allottee is a financial creditor. This is what the interpretation of representative is. I am not going into section by section definition, but yes, if somebody is having a class of financial creditor, that means let's say home buyer is a class. In that particular class, an insolvency professional will have to be nominated to represent that class. To represent that class, and what would be the claims based on? Claims would be based on agreement to sell, because probably sale deed would not be there in most of the insolvent cases. However, if there is a sale deed, now here I am clarifying your point. If it is a sale deed, then that person is having right and therefore he becomes a secured financial creditor. So if there is a sale deed, there is no argument, he becomes a secured financial creditor. The allottee is a secured FC for the waterfall purpose. If now sale deed concept I am removing and I am coming on to general persons who are not having sale deed. So agreement for sale or letter of allotment or payments made would be considered for the evaluation of claim and admission of claim of that particular home buyer. I am using the word home buyer, but the law says allottee. So it could be a commercial real estate project also. It could be like a mall. I was handling recently a case of a mall where a shop owner is also an allottee. So it could be a non-residential project also. The claims would be counted like this. Now here, law says that 3 IPs will have to be suggested and one insolvency professional would be ultimately representing all the persons who are of that particular class. So that is very procedural. What is important is that what would be the rate of interest if nothing is mentioned in the document. Now here the law says that interest at the rate of 8% per annum would be there if nothing is mentioned in the agreement. Now here I suppose Ashwin Bhai would be questioning me, sir, what about the Rera? Sir, IBC and Rera, now since the law is clear that IBC would override, therefore if IBC has prescribed 8% per annum rate of interest, that will prevail and the claim would be admitted at the rate of 8% per annum plus whatever is the amount. This insolvency professional who is going to collate the claims of all the buyers would be collating it as per this regulation. And yes, whatever he has to circulate in the main COC will have to be given to the class of financial creditors before 48 hours. That's what the law says. Now, total voting rights to pass a resolution plan in COC is 66%. But for getting a resolution approved by the class of financial creditors, like in this case, home buyers, will be 51%. So 51% in a class will be treated as an acceptance. Why this distinction? Suppose there are 100 home buyers in that particular class. If 51% of them are voting in favor, then the vote of that class will be treated as voted in favor for the purpose of 66% in the main COC. Just let me explain by example. For example, in the COC, the main COC, let's say there is State Bank of India, that is Bank of Baroda, and let's say home buyer class. So there are 3 COC members. Now this home buyer class is again having subclass of 100 home buyers. So now what they are saying, the law is suggesting this 100 home buyers class, if 51% is saying yes, then the vote of this class will be yes. So that 66% would be Bank A, Bank B plus home buyers. So home buyers yes will be treated as yes, home buyers no will be treated as no, but by 51%. Why this distinction? Because it was very difficult to achieve 66%. because of the very discrete number of home buyers in that particular class. So they have come out with this particular provision that 51% of the vote of home buyers will be treated as yes or no for the purpose of main COC. Now, this is how the payment has to be made to the insolvency professional per meeting, depending on the number of creditors he is representing. Again, because there was dispute with regard to fee which he is charging, therefore they have fixed capped the fees also in the regulation itself. Now, this is how the claim form for the class of financial creditors looks like. Somebody asked me, I think yesterday only, that sir, this financial creditor class is only for the cases of home buyers. No, it is not so. There could be different class of financial creditors, and depending upon the company. Let's say it's a chit fund company, then the financial creditors could be the person who has invested in the chit fund. It could be a collective investment scheme also. It could be a real estate company also. It could be a real estate company having different projects. Those two are also treated as different financial creditor class. So depending on the case, there could be different financial creditor class also. There is no prototype or thumb rule that it could be like this only. It could be variety also. So this is already I have explained you the difference, how it will be treated and how COC will work. Now this again is the process where we have come, how the waterfall is there. Now COC member who is a allottee can, as per this level, be at the third level or be at the fifth level. So third and fifth, I am talking about IBC level. So third is secured creditors or fifth is unsecured financial creditor. So allottee can be at two positions, secured or unsecured. Now, voting rights are in commensurate with the amount he has put in the company. Now, if somebody is a secured financial creditor, that means he has his security in place. If sale deed is in his name, let's say there are two real estate projects. In one real estate project, all the sale deeds are done. In the other real estate projects, sale deeds are not done. So that project wherein sale deeds are already done, the maximum claim which can be done by the allottees of that project could be only for the balance work which is pending, because land is already yours. So in that case, I would suggest that particular project may be taken out by those allottees by forming an association and completing the work on their own, if they do not want to risk that particular project in the common pool of the company. So I will explain what this concept is. This concept is called reverse CIRP. So I have few judgments on reverse CIRP also, so that I will come and explain what to do in such a case. But as for now, this is the flow, what we are going to discuss, how the money would be distributed. Now, suppose from the real estate project point of view, if I am an home buyer or I am an allottee, I have filed some consumer cases, I have filed some cases before Rera, or maybe cases before Rera tribunal, or some civil matter is going on for compensation, for delayed interest. If IBC kicks in, all these litigations will automatically get stalled, will get stopped, because as per IBC section 14, moratorium kicks in. What do we mean by moratorium? Moratorium means that particular project, no litigations can continue. Why this particular protection given to any company? Because section 14 of IBC says that pending insolvency proceeding, no litigation which is pending in a court of law can proceed, no new suit or litigation can be instituted with regard to that company before any court of law. So section 14 prohibits any litigation against the company. So if there are any cases pending in all these and the IBC is going to kick in, these all particular litigations will come to halt. So I have already explained you, so I'm not going to explain again. Pioneer Urban Judgment that says that IBC will override Rera. The another amendment which is important and which I was keeping in the initial slide was, law now says that allottees will have to be not less than 100 or 10% of the total allottees. So basically, suppose there are 1000 allottees in a particular project. So that 100 also will be minimum enough to file an application. But let's say in that project only 50 allottees are there total. That even 5 allottees, that is 10% of the total allottees, 5 also can file insolvency petition. Why this particular threshold has been increased? The reason was, let's say the company was having 10 real estate projects. Let's say 8 were 80% complete, and because of some issues 2 projects were not able to complete, or maybe due to some clearance it was getting stuck. What was happening was, allottees of those 2 projects would file insolvency, and that insolvency got admitted, and the company's total projects, even which were almost 80% complete, were coming to a halt. So because of this reason also, this particular threshold was increased, so that a single allottee or a single person who is aggrieved may not hamper the interest of all other stakeholders in the process. That was the logic of putting this particular threshold. Now today the threshold has to be interpreted with respect to real estate project. Law says that specifically a real estate project, more than 10% will have to, means 10% will have to come together. So it cannot be that real estate project 1, real estate project 2, real estate project 3. In all the 3, some people come together and reach the 10% threshold. No, it has to be real estate project wise. The 10% limit will have to be seen. So this is 2 clarification which are important at this stage. Minimum 10% or 100, whichever is less, but it has to be project wise for filing an insolvency petition as a section 7 financial creditor to initiate insolvency against the company. So these are 2 important, I would say, clarification required at this particular stage. I think Vinayji has asked some query. I think, sir, I will just take the query after I finish this. So this particular threshold again was challenged before Supreme Court, and Supreme Court has held it to be correct, constitutionally valid in Manish Kumar Jain versus Union of India. So this particular challenge has also been upheld by the Supreme Court. Now the insolvency resolution process flows like this. First 30 days COC meeting has to be called. So COC will include automatically the allottees, the home buyers, representative through an insolvency professional. 180 days is the outer limit, the first outer limit. It can be extended to 270 days. So basically 270 days is the higher limit, which has now been further extendable to 330 days. So in total, 330 days is the time limit which is permitted for the insolvency resolution. Resolution means there is a resolution plan. Somebody is going to buy the company, and therefore resolution plan is successful. But suppose the company goes into liquidation after 330 days, nobody comes and buys the company, then the assets will have to be sold in piecemeal or maybe in bunches to come out from the liquidation stage. So now I am going to tell you what will happen if it goes under liquidation. Then we will come on to project wise reverse CIRP and what fraudulent transactions, if there are, what has to be taken. So if in case it goes into liquidation, now again a concept has come of scheme of arrangement, and I think I am aware about around 2 cases where during liquidation also now the buyers are coming to revive the company. It can be revived through scheme of arrangement, and the time limit today given in the law is, if the liquidation happens, what will happen in liquidation is assets would be sold. Assets would be sold. Within 90 days, you can try and revive the company again without selling asset individually or in parcel. So basically what has happened is during resolution plan, you are able to revive the company. But in scheme of arrangement also, you can revive the company within 90 days from the date of liquidation. So all creditors, all shareholders are coming together just to sacrifice their amount to revive the company so that somebody is able to pump in money and revive the company to pay off all the stakeholders. So this is something which is new, which has come now. Otherwise, the liquidation process is selling of the assets, maybe in bunches, maybe in parcels, maybe as a slum sale, or maybe individually to anybody who is able to give the best price through e-auction. The auction process is there, and it has to be completed within 1 year from the date of liquidation. Now, let us understand why somebody will come under resolution plan, why somebody will come under liquidation. It is always better that somebody comes during resolution plan. Why so? Because in resolution plan, the person who is going to buy the company will get a clean company. We call it clean slate theory. What is clean slate theory? That the claims of other creditors automatically get zeroed. How it gets zeroed? Let's say there is an outstanding liability of income tax on the company. There is outstanding liability of GST on the company. So all those liabilities, because of the section 53 I've explained you, the crown debts are last, like that example of 1,000 rupees and 600 value of asset. Nobody is getting that 400. So that 400 rupees claim is automatically getting zeroed down. This, in this example of 1,600, there is a haircut of 40%. I have seen cases myself of 90% haircut, where the claim is of 1,000 rupees and asset is only of worth of 100 rupees. So that 90% haircut is also possible in cases where somebody is going to buy the company under resolution plan. What is the benefit? Let's say there is a loss on the company of 100 rupees. So 100 rupee loss, a person who is going to come and buy will actually have to pay no taxes till he earns the tax of 30 rupees, because 100 rupees loss, I make 100 rupees income, so no tax. So there is also a benefit of loss making company if I buy under resolution plan. Another important aspect which I am sure Ashwin Bhai would be asking me would be with respect to transfer of project. Normally, if I want to transfer a project, I will have to take the approval of Rera. I will have to take the approval of the promoters. But under insolvency, because IBC overrides the consent there, here the new buyer can take over. Only the approval is of the 66% of the financial creditor of the company. It is not required to be taken project wise. So this is again a very important thing, that the this particular threshold of Rera will not come in my way if I want to take over the company as a whole. Once I take over, once the plan is approved by NCLT, it is binding on all stakeholders, including the allottees, including the government, including the Rera authority also. So therefore, this is like one thing which is binding on everybody, and I need not go and fight with each and every authority that, sir, please give me this permission, please give me this permission. Once I have got the plan approved, tax is zero, or let's say carry forward of losses is permitted, automatically permitted. I need not go to income tax department. I need not go to Rera department. I am done once the plan is approved. Operational creditors, most of the claims are of operational creditors. Like I told you the example of sales tax or income tax. These all are operational creditors, or maybe the vendors who have supplied goods or services to the company. All those are automatically getting zeroed. Otherwise, what was happening, suppose if I want to revive a project and if it is not done through insolvency process, anybody who takes over the company or wants to complete the project will also have to pay off all these persons who are otherwise operational creditors and who are liable to payment. So tax dues are zeros, operational creditors are zeroed down, and the company is getting a clean slate theory. So basically the person is getting a clean company. Now, whether the shareholders will get something or not, again, this is a query which is mostly asked by many of the people. See, this is entirely a choice of the buyer. Like in the case of Videocon, Vedanta has not paid any of the shareholders. In fact, they are zeroing it down. Recently, in case of Syntax, also shareholders are getting nothing. But previously, like in the case of Alok Industries, the shareholders' share value was reduced from 100 to 10. So it is entirely at the mercy of the person who is buying, whether shareholders are going to get something or not. So therefore, this is the resolution plan is the best way to acquire a company. If even otherwise also somebody wants to acquire a company, I would suggest that go through resolution plan, because it will help you to overcome those litigations which are contingent or otherwise which you will have to pay, but it will not be viable if you are going to purchase the company other than IBC. Now, some of the queries which are comes to me is when insolvency is filed. Suppose 10% of the allottees are together and fight for insolvency and case gets admitted. What to do? So if before admission, real estate owner or the developer is coming to you, what should we do? You can settle it out of the court. He can withdraw the petition even before the admission. Suppose the admission has happened. Don't let COC being formed and try to settle with the petitioner before formation of COC. It is permitted. You just have to pay the insolvency professional fee for the time he has given his services. Plus, obviously, if he has made a publication in the newspaper, you will have to bear that particular cost. But once the COC is formed, that is the 30 days time limit is breached, in that particular case, COC's 90% approval is required. Without 90% approval, settlement cannot take place. So settlement can be pre-admission, post-admission, pre-COC and post-COC. So 3 categories of settlement can be there in case you don't want to go through the process of insolvency. So this is, I am talking you from the perspective of the owner of the real estate project, that a settlement can be worked out. Another important aspect which normally is not done, or I would say less done by real estate authorities, is forensic audit. Forensic audit normally I have seen has been ordered by some of the Rera authorities, wherein there was some allegation with respect to project that there was a siphoning or diversion of funds. But in case of IBC, it is a compulsion that the insolvency professional will have to form an opinion on the PUF transactions. What are PUF transactions? So preferential, undervalued, fraudulent, and extortionate. So preferential is giving preference to one class of creditors over other. Let's say I am giving preference to my relatives and paying them off in preference to others. Or I have sold some particular property at a very less value, or I have just tried to do a fraudulent transaction to take away money from the company, or I have borrowed at a rate of interest which is exorbitant. Normally, to make constitution of COC in my favor, I may borrow from some known source and tell him to charge, let's say, 200% of interest, 100% of interest. I've seen cases where there is a 1% rate of interest on 1 day default. So if suppose 100 days is there, 100%. In fact, I'm talking about one Mumbai case only, where I saw default of 1% on every day. So 1 day delay, 1% more. 1 day delay, 1% more. So if it is a 300 days delay, 300% more. So such type of transactions are illegal and they can be reversed by NCLT. If some transactions are entered into by the company just to defraud maybe the allottees, maybe the stakeholders, these all can be reversed by the NCLT. The time limit is 1 year and 2 years for related party and unrelated party. So I am not going into that. Here I want to tell you about the JP Infra case, where the JP Infra was also listed company. JP Associate Limited is also listed company. Now JP Infra, as we all know, went under insolvency. The allegation made by the insolvency professional based on the forensic report was fraudulently JP Infra Limited land was given 858 acres of land of JP Infra Limited was given to Jayaprakash Associate Limited for taking a loan. So basically their property was mortgaged to benefit the parent company, because this was the holding company and this was the subsidiary company. So subsidiary asset was given to holding company for their benefit. Whereas JP Infra Limited was not able to make the payment to the bankers, complete the projects. Therefore, this transaction was considered to be a fraudulent transaction by the insolvency professional. However, Supreme Court said that this is not a fraudulent transaction, but it's a preferential transaction to give benefit to the related party. This particular land has been transacted and therefore they ordered to reverse the transaction. So 858 acres of land was restored to JP Infra Limited for their insolvency resolution process. So therefore, this is a very welcome judgment where on the basis of forensic audit report, a transaction which was considered to be dubious was reversed. And this is the highest court judgment. So very importantly, this judgment is very important for us. In fact, the wrongdoings of the promoter or the developer or the builder can be taken to task by these sections, when we can actually point out that there is a siphoning of money or diversion of funds, wherein the project is not getting completed because of this. So this is again, I'm giving you just example, just highlights of 29A default. So 29A is an ineligibility section. So even if there are relatives of a person who is going to get defaulted, then the persons who are relative of the defaulting person also cannot make a bid for the company. So I'm not going too deep into it, but you can read it. It's a very good article on the wire, how the disqualification happens. I'm just skipping it for the time being. So I will now take you all to reverse CIRP. Once we finish the reverse CIRP, then we will take all the questions. Just a moment. Ashwinji, is it visible? Reverse CIRP PPT?
Yes, it is visible.
Okay, so this reverse CIRP is something new. What is reverse CIRP? See, as per law, there is no concept of reverse CIRP if you read the bare law. But what NCLAT has permitted, so NCLAT, the appellate tribunal has permitted using their inherent powers. In the case of Flatbuyer Association of Winter Hill, Gurgaon, or famously called Umang Realtek matter, that the project, specifically one project has been taken out from the insolvency resolution process, and the assets and liability of that particular project are kept separate. So to basically what is to be done in this particular case is, a particular project is, let's say, complete. I would say, for example, 80% the project is complete, and only for 20% this particular project gets involved in the total corporate insolvency of that company. So let's say that company might be having 5 real estate projects. One is 80% complete and the others maybe 10%, 20%, 40% complete. So in my view, my suggestion would be that 80% project which is complete, the allottees in that particular project should form an association and file an application to take out this particular project outside the insolvency resolution process of the total company. Because otherwise this particular project, if it is going into insolvency process of the total company, all the assets of this process also gets engulfed in the pool of the project of the total company. Now that 20% completion can be done by the association of the allottees of that particular project. So therefore it can be successfully completed and taken out. That could be one way of doing it. Second way could be that the particular project, the money maybe for the pending work you may require 1 crore rupees. And suppose that 1 crore rupees you have calculated maybe on the basis of some engineer valuation or a third party valuer, you have got this civil work done, and yes, this would be estimated cost. Now that claim on the basis of association can be filed with the insolvency professional, and whatever money would be coming, you can utilize it. So suppose your claim is 1 crore, and that the money which is going to come to you, probably if the somebody is come to buy, maybe 20 lakhs. So for the rest of the 80 lakhs, you all can contribute and complete the project. So this is one way of bailing out a specific project out of the total CIRP of the company. And this is called reverse CIRP. In one of this case, Rajesh Gupta versus Babita Gupta case, what was done was the promoter himself came out and said that I am ready to complete, and you please allow this project to be taken out. Assets, liability, expenditure of this particular project will be done by me. Specific control of insolvency professional will be there on the bank account, but I will be able to complete and deliver the project. So this was also permitted in this particular case. So I am not going on the clause by clause what has happened, but the project overall, if there are 4, 5, 8, 10, 15 projects, those buyers can form an association and take out a particular project to complete it if they think that they will be able to do it on their own. Secondly, if they think that particular project, if it goes into the complete process of the company, then they might end up losing their units or their land also into the total pool. Therefore, this particular reverse CIRP can be used to take it out. Now, this has been approved in these two projects. I have already told you Gupta matter and the Gurgaon matter, Umang Realtek matter. But then recently NCLAT in one of the case has rejected this. This is the case of Sheltrax, wherein they have rejected, saying that insolvency professional came to the court saying that, sir, let's say there are 5 projects. I want to issue EOI, that is expression of interest, for selling the projects separately. Court said that you cannot rely on the previous judgment, because the previous judgment promoter came forward or the flat buyer association came forward to take out their project and to complete it. Insolvency professional is not entitled to ask for separate EOI. He has to publish a complete EOI for the corporate debtor and ask for the bids. So separate bids cannot be asked for separate projects, as it is not permitted under the law to sell the project separately. Insolvency law says sell the company as a whole and not the project separately. So what distinction we can draw from these judgments is that first of all, the move has to be done by maybe the flat buyers association, maybe by the promoter who is maybe the builder or developer of the project, to carve out their project, to take out their project from the complete corporate debtor's asset and try to revive that particular project. However, insolvency professional cannot on his own take out the project and ask for completing that project on his own. So that is what the sum and substance of these judgments is. Ashwin bhai, I think I have completed this reverse CIRP also. If there are now queries, the house is open for the queries.
Yeah. I will just go through some of the queries. Can one enforce in asset under section 52 and relinquish other asset to the estate under 53? Basically, is a part of relinquishment allowed? I don't think question is so clear.
I also could not follow exactly what was being asked, but I can just explain what is 52 and 53. Section 52 comes into picture only when there is liquidation. So section 52 says that a financial creditor who is having a specific right over a particular asset can take out that particular asset from the insolvency process and sell that asset. So suppose my loan is 100 rupees. Let's say I'm SBI. I am having a mortgage over a particular property. I can take out that property and sell it. Now, suppose I have only got 80 rupees in selling that property. For 20 rupees deficit, again, I will be coming in the waterfall of 53 and asking for the 20 rupees. But let's say I have taken the asset out of 100 rupees loan and I get 150 by selling it. So that 50 rupees surplus, I will have to hand over to the liquidator for distribution amongst the stakeholders. So that is what section 52 and 53 is. But it only gets triggered, 52 only gets triggered during liquidation and not during the process of insolvency.
Yeah.
Hi Nipun,
There is
Sachin
some
here.
question from Sachin Shukla.
Yeah.
Yes.
Hi Nipun. Nipun, my query was supposedly I had two assets, right? So I want to enforce one asset under 52 and I want to relinquish the other asset under 53, because one asset I have exclusive charge and the other asset it's pari passu between all the lenders. So I wanted to know whether I can relinquish one asset to the estate which the liquidator will enforce, sell it, and the other on which I have exclusive charge. Can I enforce that under 52? Basically, whether part relinquishment is allowed. Like out of the entire pool of assets I have, half I'll enforce under 52 and the other half I can relinquish to 53.
See, there is no prohibition in the law to partly go for 52 and partly go for 53. But specifically, if you ask me whether it is specified in the forms, answer is no. So you will have to file separate forms for enforcing separate security. Theoretically speaking, yes, 52 and 53 is allowed. However, I have come across, I think, one of the case of NCLT Delhi, where it has been permitted in the case of infrastructure company. I'm not able to recollect the name, but it is an NCLT Delhi judgment where one bank has gone for this specific asset. They have taken it out under 52, and for pari passu, they have continued to be in the 53 waterfall.
Okay.
Nipun
Thank
bhai,
you.
there is one question. If the agreement is entered with buyback clause, whether he is a allottee for the purpose of IBC, that is a financial creditor, or he is an investor.
So as far as IBC is concerned, there is no differentiation of investor and allottee. It is only allottee which has to be seen. And for allottee, we have that financial creditor definition. So even if you are an investor, it doesn't make any difference as far as IBC is concerned.
Yeah. Hello. I'm Kanekal Chandrasekhar.
Yes.
We have one CRP which is ongoing. There are two projects. One project is almost complete and the other project is incomplete. The project which is complete, the developer has oversold almost 3 times the area. It is a commercial office space. So now, what will be the status of this project where there are 3 buyers for a given area? So how we should move? I mean, whether we can, suppose we form the association, we don't know who is the actual owner because there are 3 buyers for a given space. So what is the way out? Can you just suggest, Mr. Singh?
Chandrasekhar ji, if there is one unit which is sold to multiple buyers,
Yeah.
I think only the first in point of time agreement would be valid. Subsequent would be classified as a fraudulent transaction and they will have to ask for restoration of that money. Because as per law, whatever is done first would be deemed to be a bona fide purchaser and subsequently it will have to be classified as fraudulent transaction. As far as you are concerned, you are only required to see the books of accounts and classify them as secured and unsecured. So if you are talking from the insolvency professional point of view, your would be claims to be taken as secured and unsecured. However, when you are aware that such a thing has happened, you will have to also file an application for fraudulent transaction.
Yeah, but as an RP, I know that there are multiple buyers, but while suppose there are few claims, few allottees have said that already sale deed is there in my favor, so I am not going to file a claim. Whereas few of them have come forward, filed their claim. Now I don't know who is the first allottee or the second allottee. So how I have to proceed in that project?
Sir, why will you not know? I don't understand your query. Suppose I have given payment to the company in January.
Yeah.
Suppose Ashwin Bhai has made the payment in March. Who is the first person? The person who has given in January. Now, if you are saying out of 2 buyers, one has already executed the sale deed. So obviously the second person cannot execute the sale deed for the same land.
Okay.
Correct?
Nipun bhai,
So
just to add to this, if the first buyer is say unregistered, he is holding only allotment letter, and the second buyer is a registered agreement, will it make any difference?
Sir, that's what I was asking. When you are talking about a agreement to sell, it is different from sale deed.
Yes.
There cannot be multiple sale deeds. Correct. Now, when you are having agreement to sell, it does not give you a vested right under Transfer of Property Act.
Yeah.
So as far as agreement to sell is concerned, it will be an unsecured creditor only.
Yeah, but here there are multiple buyers. Already sale deeds have been executed almost 3 times the area. So
that's what I'm asking. How is it executed? Then it's a case of fraud.
Yeah, it is a case of fraud, clear-cut fraud.
So how the RP transaction application only, sir? Then you are left with no other option. Because then you cannot distinguish between secured and unsecured.
Correct.
So now the RP has to file, what you call in NCLT.
Application
In fact,
to
if you are
whatever.
coming that if you are coming to know that for one particular land they have transacted 3 times the sale deed,
Yeah,
you will have
yeah.
to immediately file a criminal complaint also and move a fraudulent transaction section 66 application immediately before NCLT.
Against the promoter. Okay.
Yes, yes.
Right. Acha, acha. Okay. Right. Okay.
I
Thank
have
you.
got a question. You were telling that an allotee is a secured creditor, whereas a person with an agreement for sale is not a secured creditor.
No. I said if you are having a sale deed.
Yeah, sale deed.
Yes,
I
allotee,
appreciate,
a
sir.
person can be an allotee even without a sale deed also.
No, I'm coming to different aspect of the matter. Sir,
Yes.
you were telling the secured financial creditor. You are distinguishing between a person with a sale deed and a person with only agreement for sale. But I am taking of a case, there is an agreement for sale wherein he has paid full stamp duty, he has paid full money, he has been put in possession. Huh? There are some issues. So that particular allotee will not be a secured financial creditor.
The facts of the case which you are narrating, ma'am, if
Hmm.
that is the case, if everything is paid,
Mhm.
then 53A of Transfer of Property Act will come
Yes,
into force.
right.
Yes, and then he would be secured creditor.
He will be a
In-
secured
In
creditor.
Yes.
her case, the
Now-
possession is also given.
Yeah.
Yes. See,
No,
in fact,
sometimes
assuming
sometimes
that possession is not being
not
given,
even given. Yes,
Okay.
sir.
even then also, if the payment is completely made, it is
Right.
accounted for, then it's a secured creditor.
Okay.
Right.
There are cases like this. In fact,
Right.
there is one judgment of NCLT Ahmedabad in the case of Peace Infra, where a similar situation was there. Payment was made, sale deed was not executed,
Hmm.
but everything, naya paisa was also being reconciled. Court gave direction to the resolution professional to execute the sale deed.
Sir, now I will take a reverse case. There is a registered sale deed. Full amount is not paid. As against that agreement for sale, full amount is paid. Then here also the person with a registered sale deed will have a preference as against the person with agreement for sale.
Can you explain me with an example
See,
how it can?
let's say there is a building in which some flats are being sold. Mr. A entered into an agreement for agreement for sale or sale deed, whatever you call, a registered document. Hmm? And he has paid 10% or 20%, balance is yet to be paid. As against there is Mr. X, who has only done an agreement for sale. He has not registered, he has paid stamp duty, he has paid, let's say, almost 90% of the amount, because some people take advantage to make earlier payment and take some discounts from the builder. The builder gives that sort of an offer. So that person is there with a 90%. Here, person with the registered sale deed only with 10 or 20%. So what will be the parity between the two?
Such case also, again, the judgment I was referring to, wherein the substantial payment was made.
Right.
So court said that, assuming that 100 rupees was the unit price,
Right.
you have paid 90 rupees.
Right.
If you are willing to pay the balance 10 rupees, the court has given orders to execute
Right.
sale deed on the payment of the balance money.
Right, sir.
But assuming in your case, let's say 100 rupees was the value, you
Right.
got a discount from the builder of 10 rupees, you
Right.
paid only 90 rupees, but there
Right.
is no documentation to show that 10
Right.
rupees discount was given.
Right.
In that particular case, you will have to shell that 10 rupees more to get that sale deed done. Otherwise, you would be classified as an unsecured financial creditor. So it is always wise, because
Right.
I am not able to take all the examples in this short presentation. But in my view, if your case is of 90%, it is always better to undertake to pay the balance 10 rupees and get the sale deed done than to be categorized as unsecured financial creditor and end up getting only maybe 50-60% whatever is coming in the waterfall.
Okay. Thank you, sir. Thank you.
Welcome.
Now we will
Nipun
take
sir,
up
Vinay sir,
the
Vinay
chat.
here.
One
Nipun sir,
minute,
Vinay
one
here.
minute, 1 minute. I will take up the question in the chat box. One question is, NCDs are issued to parent company by fund against the mortgage of subsidiary company. Now parent or holding company is into liquidation. What would be the fate of the subsidiary allotee? Again, the question is confusing.
We
Sir, I
can,
will explain.
okay.
Okay,
Yes, Vinay ji.
basically, sir, as we know that like this industry plays a very different role by having multiple companies for each project. However, funds are raised through the parent company. Okay, and shareholding also by a parent company. And parent company has raised the NCDs, non-convertible debenture, by mortgaging the subsidiary company land. Now the parent company is into the liquidation. So this is a mixture of whatever be the case studies you are given, Umang or Tata or whatever may be. So can the subsidiary company SPV can go separately and can come out from this whatever be the CIRP process? Because subsidiary company is a clean company. This doesn't have any loans. It has only the allottees in the company and some operational or statutory dues. But they do not have anything other than this. But parent company has taken and mortgaged its land.
So, sir, then you should actually refer to the judgment of JP Infra, which I was quoting, Supreme Court judgment on JP Infra, wherein a similar case had happened. JP Infra, which was the subsidiary of the holding company JP Associates Limited. JP Associate basically took loan and mortgaged the land of JP Infra Limited. Now, this transaction was reversed by the court, saying that it's a preferential transaction. You cannot take the land of the subsidiary for the benefit of the holding company, even though all the bankers were crying in the court saying that no, sir, you cannot reverse it. There is a mortgage deed, there is a registered document. Court said nothing doing. It's a preferential transaction. When you are aware that the subsidiary company is not financially healthy, how you can take the assets of the subsidiary company for the benefit of the holding company? So that particular transaction was nullified and reversed. So probably what you are asking, sir, today, my view is that particular land cannot be utilized by the holding company relying on the JP Infra judgment, and you can move an application under section 66 of IBC code to reverse this transaction.
Okay. Thank you, sir. Thank you, Nipun.
Nipunji, there is one question. Post COC formation, if somebody can pay 50% of outstanding due and take the consent of 90%, whether that is permissible or not?
Pardon, sir, 50% is paid by the financial creditor.
Yeah, means the claim of the creditors are paid to the extent of 50%, and he want to take the consent of 90% for the withdrawal of application.
Sir, law says that 90% of COC should consent. It does not say whether they will consent at 10%, 50% or 100%. So it is entirely between the parties to decide. In fact, I have seen the cases where withdrawal has been done on the basis of post-dated check also. Even actual payment is not necessary.
In fact, to my knowledge, the payment cannot be made because that would amount to preferential payment.
No, normally what happens, sir, in settlement cases, there could be two types of payment. One is promoter is shelling out money from his personal pocket, and thereby he's writing in the form FA, the settlement agreement, which has to be annexed with form FA, that this money he would take from the company because he is giving it for the benefit of the company.
Correct.
Second way of doing it is, suppose I am entering into an agreement on behalf of the company subject to approval by NCLT. So if NCLT approves, then that payment can be done by the company.
Correct. I think Manish Kumar Patel want to ask some question.
Hello.
Yes, sir, please.
Sir, I have one question, and this question is with reference to the projects where there are multiple sellers for each. In some of the projects, there would be such arrangement that once the project is completed, then they will hand over the possession of particular area. And in such a case, if suppose one party has paid the money and he is allotee, but his area is not earmarked, then whether he would be the secured or unsecured.
Sir, sale deed is executed or not?
Sale deed is executed, but it is not particular for a particular area.
Sir, I have never seen a sale deed executed without earmarked land. Ashwin bhai, have you come across such a transaction?
No.
Because normally sale deed they mention that this much is the land, this much is the area.
Even at sub-register, it can't be registered, sir, without a schedule of property.
Correct.
So it
And,
just can't.
I'll like to add here. No, excuse me. I'll just like to add. There are two sale deeds in a floor. For example, fifth floor, three sale deeds are executed. In one sale deed, the first sale deed, there is area is mentioned, but demarcation is not there. Whether it is coming in a corner or just they have said 2,000 square feet. In the second sale deed, they have said 2,000 square feet. They have specified which corner. Along with the sketch. And in the third sale deed, again, there is no mention of any sketch, just said 2,000 square feet. So in that scenario, who will have a claim on that? Because in the second sale deed, it's very clearly specified that this area is, there's sketch also. So whereas the first sale deed that doesn't have a sketch. So who will have a ownership of who will be the ownership of that property, particular property?
So I am assuming an example which you are given. Let's say there is 2,000 square feet of floor.
Yeah,
now,
of area. 2,000 square feet of office space.
Correct.
Yeah.
2,000 square feet. Now, builder has sold 1,000 square feet.
Yeah.
Earmarked. 1,000 square feet not earmarked. And
No,
again,
Builder has sold out of the 2,000, 1,000 he has sold to the first buyer.
Let me complete, sir.
Yeah,
Let
sorry.
me complete. Please.
Yeah.
I am saying I have 2,000 square feet and
Yes.
builder has sold 3,000 square feet. Okay.
Yes.
So that excess 1,000 square feet is a fraud.
No, sir, it's not like that. See, area is 2,000. Builder has sold 6,000 square feet.
Assuming, sir, 6,000, whatever is with you, only you can sell that. No.
But in that 6,000, what has happened? There are, suppose he has sold 1,000 square feet to the first buyer. Just he has said out of 2,000, 1,000. He has not earmarked which is that area within that 2,000.
That you can automatically calculate, no? Suppose,
No, but whereas the second sale deed, he said clearly that northeast, this is the area, and with a sketch he has registered. So who will have a claim, whether the first buyer or the second buyer?
Again, I am just hypothetically trying to answer.
Nipunji, first of all, the sale by the developer should be in accordance with the approved plan.
Correct.
There has to be identification. Now, such kind of transaction, whether first of all, he would be allottee, just because there is some ambiguous sale, whether he would be allottee means allottee in relation to the real estate project, and there are some conditions. He has been allotted plot, apartment, or building, which are registered. So whether that would be an allottee, first of all, that is the question.
Correct. So, sir, your question is also well taken by Ashwin Bhai, that if he is not an allottee, he does not have any right, number one. Number two, if whatever is with me, I am selling anything excess, that's a fraud. So even otherwise also, there cannot be a secured financial creditor. At the best, he could be a financial creditor without security. Again, facts of the case will have to be verified and seen what is the transaction which is happening beyond the available stock. If it is beyond the available stock, you go for section 66 only, because fraudulent transaction, you cannot claim a right over the property. That's for sure.
Friends, I think all questions are over. Nipun Bhai have dealt with all the queries.
Sir, I have a query, sir.
Okay, last question.
Yes, sir, I wanted to know, since we have discussed a lot on the non-obstant clause in IBC, which will override which law and all. So just wanted to know whether IBC will override PMLA. Because there has been a lot of fights between the banks and ED, who will override whom, the assets are attached, the secured assets are attached. So just wanted to know.
So you will actually have to wait for the Supreme Court to decide. The matter is already pending in Bhushan Steel. Previously, the view taken by NCLAT was that PMLA will not override. But again, recently the larger bench has held that PMLA will override IBC law also. So if once the assets are attached by the Enforcement Directorate, those assets cannot be used in the insolvency process. Now that matter has gone to Supreme Court. Let us wait for the Supreme Court to decide. I think the matter is already reserved for the orders. Let us see what Supreme Court decides. And in my personal view, Supreme Court will decide in favor of IBC, because ultimately Enforcement Directorate, even if it takes the assets, it's not going to be the resolution of the corporate debtor. And the basic object of the IBC is to resolve the corporate debtors' debts. So ultimately, I think that court will do something in favor of IBC only. But again, that is my view. Let us wait for the Supreme Court to decide.
Sir, but if any asset is purchased from the proceeds of crime, and if that asset is given some
Ultimately, that asset goes to
legitimacy.
Union of India. A PMLA law says that whatever is attached by the Enforcement
And
Directorate.
I agree. What I was saying is, sir, if some asset is purchased by some promoter from proceeds of crime, and that asset is attached, okay, because that is questionable, right? Or legitimacy of that asset, okay. So if IBC overrides PMLA, then that asset which is purchased from proceeds of crime will get a legal title and will pass on to the resolution applicant. So some
Okay, so
asset which
you mean
is
to say that if the ED has attached the asset and it goes to Union of India, it gets a better legal title? It's
no,
not like that.
I'm saying if any asset is attached by ED, which they think is processed out of crime,
So
and
every time the asset which is attached by ED is on the preponderance that it is of crime only.
yeah, yes.
So what happens ultimately? If suppose IBC was not there, what will happen to that asset? That asset goes to Union of
Yes,
India,
yes.
right? It belongs to the government. So
Yeah.
do you mean to say that then government can use this asset even if it is of illicit money? That's not the logic. The logic is.
No, sir, sorry, I am not able to convey exactly. I'll put it again. What I was saying is there is one asset which is purchased from proceeds of crime. Okay. Now, Supreme Court says that IBC will override PMLA. Then what will happen to this asset? If the final attachment comes in and the adjudicating authority holds that, yeah, this is an asset which is proceeds of crime, then the RP will have to hand over the asset to Union of India, is what you're saying, or that asset will remain with the corporate debtor and then pass on to the resolution applicant?
Sachinji, what you are trying to say, I am explaining that only. I've understood your query because you might be handling with one case. I am already handling with 6 cases of ED. The point in PMLA law is that the asset which is of gone from illicit money, ultimately that asset is built up and that goes to the government of India, and the government of India can use that asset. So usage of asset does not mean that the source of fund is legitimized. Suppose today we have so many diamond merchants running outside India. All those assets are being attached by the government. So what government does? Either it will auction those assets, get money, utilize it for themselves. So government is also selling those assets ultimately. ED is also doing auction. SEBI is also doing auction. So doing auction or selling of the assets which are attached under PMLA does not legitimize the proceeds of crime. The only point is the money which is being got by those auction, let's say SEBI auctions, the money is being distributed with the investors. Similarly, if under insolvency, it is upheld that IBC will override, that particular asset will come in the resolution plan. And ultimately that money will get distributed with the stakeholders. Simple as that. There is no conflict as such.
Nipunji, only last question.
Yes, sir.
Thank you,
As
sir.
regards the concurrent CIRP proceeding against the CD and personal guarantor. Now here, what relief personal guarantor can avail since both the proceedings are going on? Just throw some light on that.
Sir, your query is that once the insolvency of the company has started,
yes,
the promoter's insolvency has also commenced, right?
Yes.
Okay. So in the case of individual insolvency, the first option available to the guarantor is to offer a repayment plan. So I would say it is just like sitting across with the creditor and getting an OTS done, because there is no concept of resolution here. There is nobody who is going to come and buy the debts of the individual person. So what practically happens is repayment plan either is proposed by the promoter or it may be proposed by some of the relatives of the promoter. So that is how it happens. And normally they have excluded some of the asset, that is one home up to the amount of 10 lakh or 20 lakh, that amount, and some ornaments. That is what is excluded. So in my view, personal insolvency, it is always better to sit across the financial creditor and settle the amount with whatever assets you have. Because ultimately, if I am having assets of 50 rupees and my claim against me is of 1,000 rupees, I will not be able to satisfy them. So I can only offer to keep those assets with me.
But can the personal guarantor say that wait till the CIRP of the CD, what outcome is coming?
No, sir, that has been rejected by the Supreme Court now. So that argument is not available after
So then-
Lalit Kumar Jain, and now
Yeah.
recently
So
2 days
then-
back also
Yeah.
Supreme
so
Court
then
has.
the personal guarantor will step in the shoes as a creditor once he make the payment. Suppose I am a personal guarantor to the CD. I have paid 5 crore to the creditor. So now I am the creditor for the CD.
Yes, sir. That is right, sir.
Okay, friends. So we had a
Sir,
very nice
Mr.
interaction.
Joginder, if you can
Uh,
take up one question from me, please.
We are running out of time. Okay, only last question. No more question.
No, sir. So this is a reference to the JP insolvency case. Okay, so I am one of the LOT from the JP Sports City. If you can just share this any update and status on this insolvency proceeding, or how can I come out of it?
So Joginder ji, broadly speaking, the resolution plan is approved. So process is underway, and probably whatever is given for your particular project, I think it must be revived. If you have not got the copy of the resolution plan, you can write to the insolvency professional, because recently in Jet Airways case, NCLAT said that resolution plan copy has to be given to the affected party. So you can ask for that, and if whatever is the time schedule in the resolution plan, you can very well check it. And if you are not happy with what the working is, you can definitely go and file an application with NCLT. So broadly, I can say that. Otherwise, sir, they can contact me personally for any queries. Ashwin bhai,
Yeah.
As you mentioned, for the same, been done, but the response is like one of the parties went into insolvency, like JP Infra went into insolvency, but the Sports City, it's coming under Gel India. So you your application cannot be considered. So that is the response from there.
So it all depends on the fact of the case, each case. Their response from the RP would be based on that only. Okay, friends. So we had a very nice interaction with Advocate Nipun Singhvi. Now I'll request our association treasurer, C. Aditya Jante, to propose the well-deserved vote of thanks. Aditya?
Thank you very much, Nipun Singhvi sir. Actually, I missed a few of your slides. Later on, I was very attentive, and I am not yet an insolvency professional, but in future, definitely, it will really help me. And I got a deep insight of whatever you have mentioned, and really, it was very helpful for understanding the current status of the financial creditor. But somewhere, I read an article also recently that still 283 cases were admitted as in the insolvency, and out of the outcome is only 4% as on date, which has been successfully resolved. So somewhere the proceedings and everything is in future we will come the outcome to come to know, because in Rera also more the cases are pending. So but this will definitely help in a better way for the guidance to the insolvency professional as well as the buyers. And you provided a deep insight into this. We are very much thankful to have you here in today's session. Thank you very much, sir.
Yeah. Thank you, Nipunji, for your
excellent presentation, Singhvi. Congratulations.
So my only request to the participant is please spread the message of the association. Put your remarks in our group about this webinar, your reviews on or your feedback of this webinar, so that we can arrange such kind of interactive webinar in future. Thank you very much.
Yeah. Okay. Thank you.
thank you, sir. Thank you, Ashwin bhai. Thank you, Aditya ji.
Thank you.